Hello traders, Gary Wagner with Trending Markets. We are currently looking at the euro. Euro is trading slightly higher today. In fact, dollar slightly lower after that dramatic day we saw yesterday. As far as the euro is going, it's back above 112, just right around there, 112.09. In terms of the highs we've seen today, 23 or 112.34, and the low 111.59. So traders, as I said, the market is slightly higher than where we went in at. We went in at roughly 111.5. Market's trading roughly 112 right there on the even point. One of the things that we did is we placed the stop above the recent high. The recent high, of course, was right before the tremendous fall. And the key is that the recent high was really, I've pulled up a daily chart, but the recent high was this candle here. And this is where we got that 113.47, this stop. So I still believe that the stop is quite good. We've still got our moving average moving in the way that we want. We've gotten the cross that we have. And we do have, as I said, a slightly up day in the euro. And that slightly up day really corresponds to a slight down day in the US dollar. Of course, we really have the Greek debt crisis coming to some sort of a head or resolution. There will be emergency meetings, I understand, this weekend, and there is some sort of resolution in the works. And so everybody's looking for the market really to resolve itself. We saw the equities markets move up tremendously, both overseas as well as in the United States. And a lot of pundits were citing the fact that it was the fact that this crisis has been potentially averted. Now, let's take a look at the US dollar. And you can see that the dollar now is trading off slightly, 95.25. When we look at our daily chart, you can really see some of the same activity, the reverse, the mirror image, I should say, of what we saw in the euro. And that is this tremendous uptick day that we had in the dollar. Of course, that was that tremendous downtick day we saw in the euro. And then that slight little opposite candle forming on our daily charts. We had a small green candle in the euro and a small red candle in the dollar. So in terms of official business, maintain your current short position in the euro dollar. If you got long dollars, as we suggested during the show, although we didn't put out as a specific trade recommendation, maintain long dollars, maintain stops in both positions. Equities markets, quite interesting. We had some dramatic moves, but those moves took us back very, very close to the most recent highs. Dow Jones Industrial Average closing back below 18,000 at 17,966, putting it off about 178 points on the day. But really, when we take a look at this market, here's what I find noteworthy, and that is that we all know that we're real top heavy in this market. We have been flirting with these tops for the better part of this year, and that is why when we have a dramatic down day in the equities markets, you'll see the pundits come on the various news stations and say that we've given back all of the gains that we've gotten this year. Well, when we consider that here's the beginning of 2015, and the market was sitting roughly just below 18 right in here, you can see, let me just draw a line straight across. You can see that all of these closes here effectively close giving up the gains of the year, and here effectively we're back in gains. So we are certainly flirting at the top of this range, and the key is this: as long as we go up and hit a brick wall and come back down, we will continue to flirt with these areas. But traders, obviously one of two things will happen. This particular resistance level will either hold, and if it does hold, we'll get some sort of a sizable correction. We've seen these sizable corrections here, for example, in October of 2012, and it corrects here. So it wasn't that 10% that a lot of people were looking for. You can also see right up here the end of 2013, and then as the market opens, you get this market moving and retracing. So we have had corrections within the market, such as here, such as here, such as here, but these haven't been the types of corrections that many have anticipated, and that of course is something along the lines of 10 or 15, maybe even 20%, a real blow off of steam. Well, we certainly haven't seen any evidence of that. What I believe we're seeing, and only time will tell if we're correct, but I think what we're seeing is the market consolidating, because typically when you get a market that reaches a new high, takes it out a little bit, but then falters just a little bit, you'll have that market consolidate for a while before it then moves up to its next level. And this market right here is not showing us signs yet that we're going to get any kind of a sizable correction. Now, these words will be words that I have to eat with a straw hat if in fact we have a major breakdown in the talks over in Europe, and that it spills over into their equities markets coming under pressure, and therefore our equities markets coming under pressure. We could see the market blow off. We could see it blow off as early as the beginning of next week. But on a technical basis, all I can say is that at least chart-wise, it absolutely appears as though we are consolidating in the market before moving higher. And the last market that I do want to cover on today's show is crude oil. Crude oil closing off about 77 points to close at 60.70 on the Japanese average charts. Of course, that's going to average it out. The actual close was 60.25. Now, when I look at this particular chart, the one thing that seems really logical to us, and realize that the market had been trading roughly at what, $100, $110.90 per barrel throughout the last couple of years. Then we saw this dramatic decline in the market where we go from 100 down to our first low of 50, and then our secondary low, I believe it was 42 or 43 right here. We then went into an upward track. We've got a very, very short-term moving average. I believe I've just set it for 14 days. So you've got a short-term moving average. It was trading well above that. You can see that really throughout this area here. However, if you look at the most recent activity, one, oil is kind of flatlined. It's kind of trading right within this range. And if you look at it in relationship to the moving average, it's certainly telling us that it's consolidating. However, unlike the equities markets that I believe it's consolidating before a move up, I believe that in oil we're consolidating before a move down. And one of the reasons that I look at it on a technical basis is consider this. Stock market comes up, makes a new high, consolidates before it continues higher. The opposite is the same reason I'm looking at oil. This is all technically based. The market comes down, makes a series of lower lows, consolidates lower low. Now it's consolidating again. It's going to return to the overall trend or the overall direction of the market. And that's the reason I do think we could see lower pricing in crude oil. This has been Gary Wagner wishing you as always good trading. Talk to you tomorrow for another Trending Markets. Bye-bye.